The government plan for the digital dollar revealed. And is the digital dollar just the next step in the agenda to take us straight to communism? I'm going to explain this to you in 3 simple, fast steps. Step number 1, it all starts with the Banking for All Act. This was introduced right at the height of the cerveza sickness in March of 2020. Probably no coincidence there. And it outlines their objectives for a digital dollar, a digital wallet, and a Fed account. And I want to be very, very clear. These are their words, not mine. So to dive into this deeper, let's go right to the internet. This act may be cited as the Banking for All Act. And I'm just reading that right off the bill itself, so you can see that I'm not making that up. This is actually what they're talking about. We start with the definitions. Number 1, digital dollars. The term digital dollars means dollar balances consisting of digital ledger entries recorded as liabilities in the accounts of any Federal Reserve Bank. Digital dollar wallet means a digital wallet or account maintained by a Federal Reserve Bank, I want to emphasize that, on behalf of any person for the purpose of holding digital dollar balances. The term member bank means any national bank, state bank or trust which has become a member of one of the reserve banks created by the Federal Reserve. And the pass-through digital wallet is a term they're using to describe this digital wallet or account maintained by the member bank on behalf of any person, entitling the person to pro rata share of the pooled reserve balances that the member bank maintains at any Federal Reserve Bank. And they're doing it through a special purpose vehicle. And I don't want to confuse you too much. We're going to be going over this on the whiteboard. So if you're not following this completely, don't worry about it. We're going to go over it in great detail. In general, member banks shall open and maintain pass-through digital dollar wallets, although the actual accounts are with the Fed. Notice they're saying maintain. And again, we'll get into this in the whiteboard in a moment, including persons eligible to receive payments from the U.S. government, such as stimulus or UBI. Each member bank shall establish and maintain a separate legal entity. This is very important, for the exclusive purpose of holding all assets and maintaining all liabilities associated with the pass-through digital wallet. In other words, with your account at the Fed and the Fed coins or digital dollars, whatever they're calling them. The assets of any entity described in subparagraph A, that's the one we just read, shall consist exclusively of a balance maintained in a master account at the Federal Reserve Bank. And the liabilities or obligations of the entity shall consist exclusively of an equal quantity of balances maintained by holders of pass-through digital wallets. In other words, you and I, the average Joe, that downloads, we'll call it the Fed app on their phone. And one other thing I want to point out about subparagraph B is the assets of any entity described shall consist exclusively of a balance maintained in a master account at a Federal Reserve Bank. So what they're saying is the assets of this special purpose vehicle will only contain bank reserves. Said another way, they won't contain loans. So this special purpose vehicle cannot lend money. More on that in a moment. And the capital or liquidity regulations for this special purpose vehicle and how it interacts with the banks. The assets and liabilities of any legal entity described in subparagraph A, that's the special purpose vehicle, shall not be deemed assets or liabilities of the member bank for purposes of any capital or liquidity regulations, such as Basel III. Lastly, I want to point out that it says all Federal Reserve banks shall not later than January 1st, 2021, make digital wallets available to all residents and citizens of the United States, and, this is very important, to businesses domiciled in the United States. Now let's go to the whiteboard and let me explain all of this nonsense. And I would suggest all of you going through and reading that bill yourself. It's very quick, only about 7 or 8 pages. We'll put a link in the description below. But all that legalese and jargon really boils down to this. We've got your friend and family member, Fred, right there. He's the one that loves the government. He loves the Fed. So of course, he's really going to be on board to have an account with the Fed. He's really going to feel like this is cool. So he's going to download his Freedom app because he wants that stimulus check from the government, from his Uncle Sam, who he loves because Fred, of course, values safety far more than he values freedom. So he downloads the Freedom app, we'll call it, right away. Plus, groups like Starbucks. Remember, the Banking for All Act includes businesses. So we've got Moody the millennial right here working behind the counter of Starbucks. And they, of course, because I don't know Moody's preferred pronouns, so they are looking kind of disgruntled, as always. We know Moody's not very happy to be at work, and she definitely is pissed off at you for even walking through the front door. But Moody downloads the Merchant Freedom app ASAP because Starbucks wants to get on this bandwagon. So your friend and family member Fred takes his Freedom app with his barcode, goes right to the Merchant Freedom app, scans the barcode, pays for his coffee, and Moody disgruntledly makes that coffee for him as they kind of give that pissed off look. But then Moody quits her job, or their job, at Starbucks and starts working for Uber. Same exact thing. Uber has a merchant app. We'll call it the Freedom app because, as Ron Paul says, whatever the government names something, it always has the opposite effect. Well, let's back up a little and think about how this all starts with the balance sheet of the Federal Reserve. Usually, prior to the Banking for All Act and prior to 2008, the Fed just had accounts for the primary dealer banks and the banks under the Fed's umbrella. So what would happen when the Fed would want to increase the base money supply, they would buy assets from the primary dealer banks, such as treasuries or mortgage-backed securities, or mortgage-backed sausages, as I like to call them. So they buy these assets from the primary dealer banks by printing up additional base money, just funny money out of thin air. And it's literally them just adding digits to the accounts of whomever they buy the assets from. In 2008, they also added the TGA to their balance sheet. They meaning the Fed. The TGA is the Treasury General Account. That's the bank account for your drunk, insolvent Uncle Sam and the government. So what happens now is the primary dealer banks or the banks under the Fed's umbrella will buy the treasuries from the government, and then the bank reserves or cash goes into the TGA from the accounts of those banks, whomever bought the assets in the first place. But then the Fed, through this shell game, will go ahead and buy them back from the banks. So those treasuries end up on the balance sheet of the Fed, and the brand new bank reserves get added to their balance sheet. So just in summary, what happens when the Fed buys assets, it increases the size of their balance sheet, it adds bank reserves to the system, and when they decrease the size of their balance sheet, which of course they never will because they can't. We saw what happened when they tried in 2019. The whole house of cards almost came collapsing down. So they had to quickly take their balance sheet from 4 trillion right back up to 7 trillion. It's just like Peter Schiff says, the Fed's balance sheet is the monetary Roach Motel. Once you take it to a certain level, or once you go in, you can never leave. But now what this act is pushing us towards is a new system where not only the banks and the Treasury have an account with the Fed, but you, the average Joe, will have an account with the Fed as well. Or in this case, the example we're using is your friend and family member Fred, Starbucks, and Uber. So the Fed's balance sheet now would look something like this, where the liabilities were these deposits held by the banking system, the TGA, and the entities that we discussed in the private sector. And then the assets would be the same, more treasuries and mortgage-backed securities. But let's not forget the special purpose vehicle that the Banking for All Act mentioned. So these banks will only manage the digital wallet. The actual account will be held with the Fed. But whatever is on the balance sheet of this special purpose vehicle, and remember it's just kind of managing, it's maintaining the digital wallet. But the assets would be the bank reserves held at the Fed. The liabilities would be the deposits of the private sector, your friend and family member Fred, Starbucks, and Uber in this case. But whatever assets or liabilities are managed by the special purpose vehicle, remember they're outside of the use or the balance sheet of the banking system. So let's think this through. What happens if all the money or bank reserves that goes into the TGA gets distributed through stimulus checks to the private sector? Well, the amount of currency or money or bank reserves, whatever you want to call it, would shrink in the TGA and it would increase in the accounts of the private sector, the average Joe, friend and family member Fred, Starbucks, or Uber. My whole point is these accounts would change size. Therefore, what would prevent people like your friend and family member Fred loving the Freedom app so much, they're saying, listen, I want to take my money from Wells Fargo or B of A and I want to move it right to my Freedom app. So in that case, the account sizes would change again, although the overall size of the Fed's balance sheet or the liabilities on their balance sheet would stay consistent. The bank reserves or cash, whatever, would just move from one account to the other. So again, the only thing that's changing is the size of each account. But let's connect the dots. If the entities in the private sector are moving deposits away from the banking system to the Fed, that means the bank reserves held by the banking system shrinks. Okay, well, if there's no more reserves or if there's fewer reserves, that means there's less productive lending for the real economy. And we're going to address this more in step number 3. So make sure you're really paying attention to this. The lending for the private sector from the banking system, at least in a free market system, is very productive because they're out there trying to find entrepreneurs, as an example, to lend money to. These entrepreneurs create more goods and services at a lower price. It's making us all richer. It's improving the economy. Now, I'm not saying that they're doing this now because of the manipulation from all the central planners at the Fed and the government, but that's the way the banking system would most likely work if we eliminated all these crazy bailouts and things that distort the whole entire mechanism, such as the FDIC. But we'll shelf that for a moment. The bottom line is this type of lending to entrepreneurs from the banks creating additional money supply is far more productive than the lending from the Fed directly to the government, just so the government can spend that money through stimulus, putting it into the new Fed accounts for the individuals at the private sector. You see, there's no additional goods and services created here. The only thing that's created is additional money supply. It doesn't make us richer. In fact, over the long run, it only makes us poorer because we get more lazy. It hollows out the manufacturing base, and it takes us to where we are today, where we have this huge trade deficit, and we have to rely on other countries to consume and maintain our standard of living. But the bottom line takeaway is that if these bank reserves go from the banking system to the balance sheet of the Fed and the accounts of the individual entities, that means there could be less productive lending moving forward. Now, a lot of you may be saying, well, George, I get what you're saying, but there's no more reserve requirements. So the banks can just lend to infinity. It doesn't matter. To a certain extent, that's true, but we have to remember there are regulations like Basel III that do restrict the amount they can lend. It's based on the assets more so than the deposits, but I won't get into the minutia. The bottom line is effectively there is constraints through regulation that restrict the amount of lending the banks can do. So again, the fewer bank reserves they have, theoretically, the less productive lending and more non-productive lending. And that's going to be really important in step number 3. So the crucial takeaways for step number 1 is that we realize if we all have an account with the Fed, they will know every transaction. There will be no privacy whatsoever with banking. They will basically have your bank statements. And if that sounds very Orwellian, very 1984, trust me, you don't know the half of it. Wait till we get to step number 3. Step number 2, velocity, money supply, negative interest rates, and inflation. In step number 1, we went over how the Fed, the government, will know every single transaction. And it's not just about privacy. That's just where the story begins. It gets a lot worse. But it also gives them the ability to manipulate velocity, money supply, and the rate of inflation. Why is this important? Most of us get it, but I want to do a quick review. The main thrust of this video is step number 3. Trust me. So this is just a quick review because once we get into step number 3, it's going to completely blow your mind. This is something that I don't think anybody is talking about it. And if you put the pieces of the puzzle together, you see how this could take us right down the path to socialism and communism. So let's go through this briefly. The government has debt. We know they are the largest debtor of all time. Your drunk, insolvent Uncle Sam has been spending money like a drunken sailor. But why is inflation important to the government? Why do they want inflation? We always hear about that the inflation makes the debt load less of a burden. But how does it actually happen? Let's go through the mechanics of it. So the debt is on this side, the taxes or the revenue from the government is on the right. And our debt right now is over $27 trillion and growing. Just to give you some context, this year we'll add about $5 trillion in debt. It's about $4.2 trillion as we speak right now. And if you take the combined total, the accumulated amount of debt from 1776 to 1996, 220 years, what do you think that adds up to? About $5 trillion, the exact same amount of debt that we will add just this year. Really mind-blowing numbers, but it shows you how screwed our drunk, insolvent Uncle Sam is and how badly they need inflation. So the Fed knows this. They come in and try to manipulate the money supply and velocity, which they'll be able to do because of what we talked about in step number 1 in the Banking for All Act. Because we all now will have accounts with the Fed, or if we have accounts with the Fed, then it would circumnavigate the banking system. So in order to create more money supply, it would be simple. You wouldn't need those pesky banks or anything. Your drunk, insolvent Uncle Sam would just have to sell the treasuries to the Fed. The Fed would just deposit that money, bank reserves, cash, whatever you want to call it, in the TGA. Then they spend it out into the economy through the Fed coin or the Freedom app or the digital dollar, digital wallet, whatever you want to call it. So this directly would increase the amount of currency units chasing the same amount of goods and services in the real economy. Just to be crystal clear, right now when the Fed prints money, they're just printing bank reserves. And although that gives the banking system more balance sheet capacity to create more loans, which creates more money supply, there's still this transfer mechanism. And yes, the government can come in and they can do deficit spending and the Fed can monetize that. But that's kind of messy. This way, it's just a direct injection into the economy, which theoretically, the Fed or the government could really micromanage. It would be like a thermometer on the wall where they could just adjust it very easily. Of course, this doesn't account for the Eurodollar system, but that's a completely separate video. We'll just assume that this is a contained system. The monetary system, the dollar monetary system, is contained within the domestic economy. We'll assume that for this video. So the bottom line is it would be much easier for them to control the money supply in the real economy. But let's think about velocity. Well, first, what is velocity? That's just how quickly the currency units go from one entity to the next entity in the real economy. It's how fast the currency units circulate. So there's two ways you can create inflation. You can increase the money supply or increase the velocity. This increases GDP. It might just be nominal GDP. So it doesn't necessarily mean that we're creating more economic output or that our society, our economy is richer or we're increasing the standard of living. In fact, we could be decreasing the standard of living while GDP, nominal GDP, not adjusted for inflation, is actually going up. Think about Venezuela. Their GDP went through the roof. Zimbabwe, Weimar Germany. Their GDP, if you just look at nominal terms, would have gone up 1 million, probably 1 trillion times. Who knows? But their society got a lot poorer as a result. So it's a very simple equation. We have the money supply in this column, velocity, and GDP. Let's just imagine we have $10 of total money supply. If it circulates through the economy once, then nominal GDP at the end of the year is going to be $10. If they can increase velocity so that same $10 circulates twice, well, now GDP has gone up to $20. Again, it doesn't necessarily mean that we've created more goods and services or we're any richer. Now, the same thing with money supply. If we start off with $10 and it circulates once, we have $10 in GDP. Or even if velocity stays consistent, if we increase the money supply to $20 and it still circulates once, now we have $20 in overall GDP. Why is GDP so important to your drunk, insolvent Uncle Sam? Because what we've seen throughout history, and editor, let's go ahead and throw up this chart, is that tax receipts are pretty consistent as a percentage of GDP. So whether or not the highest marginal rate is 90% or 25%, the amount of tax revenue received is about the same, right around 18%. So if you want to increase tax receipts, you've got to increase nominal GDP. We'd like to see GDP increase as a result of more economic output, more goods and services being produced in an efficient manner, making all of us richer. But the government and your drunk, insolvent Uncle Sam is going to take the easy way out. They're going to try to create inflation by increasing the money supply, increasing velocity, by doing things such as saying you only have 30 days to spend your new stimulus money that's on your Freedom app, or poof, it's gone. So as soon as people get that UBI, they're out there spending it as quickly as possible. Another way they could increase velocity is through banning cash negative interest rates, which has the same effect. So they increase the money supply, increase velocity, that makes GDP go up, tax receipts go up as a result. Therefore, it bails out the government in the sense that their debt to GDP ratio goes down and tax revenue goes up. So the government gets bailed out by these Fed accounts, a digital dollar, and their ability to create inflation, while you and I get screwed. Step number 3, the dystopian endgame agenda. Does it take us straight to communism? I'll let you be the judge. So what we've learned in step number 1 and 2 is they know every single transaction if we all have accounts with the Fed. That is a huge amount of data. Also, they have control over M2 money supply velocity, therefore the rate of inflation. Let's take this to its logical conclusion. or what could happen as a result. There's one thing that's safe to say. The politicians and the global elite want more centralized power. And the number one thing they could do to have that centralized power would be to create a central bank that was the only bank. That's it. So what would happen if they take rates negative, they reduce the amount of bank reserves like we talked about in step 1 and 2? This eliminates the retail banking system. With negative interest rates, they can't make money with their old business model of borrowing short and lending long, pocketing the spread. And if you decrease the amount of bank reserves they have access to, you again limit the lending. And if you limit the lending and you make lending completely unprofitable, the banks all go bust. Now you may be saying to yourself, well, George, what about the investment banks? What about the Goldman Sachs, the JP Morgans? They're making all-time high profits right now, even during the cerveza sickness, while the retail banks are tanking because they're going down with the real economy. But let's think this through. The Fed has contributed to this boom and bust cycle we now have in asset prices through lowering interest rates. They haven't gone negative yet, but they very well could. This, along with QE infinity, has created an environment where the investment bankers, the insiders, the financial insiders are getting rich. This goes back to my video on the Cantillon effect, by the way. But we know it creates this big boom, and right now we're in the everything bubble. And all of the financial insiders just lever up. They create all of these derivatives, the quadrillions in derivatives, because they know if it comes crashing down, it doesn't matter because the Fed or the government will bail them out. So there's limitless upside and absolutely no downside whatsoever. But what if the Fed comes in or the government and decides, hey, we want to not only be the central bank, we want to be the only bank. The retail banks have already gone under, but what happens if we go through the bust part of the boom-bust cycle and all these investment banks go to the Fed and say, hey, we need our bailout. We need our bailout. We're systemically important. We're too big to fail. And the Fed basically gives them the finger. They say, sorry, guys, this time we're letting you go out of business. All of a sudden, we'd have no retail banks, no investment banks. We would only have a central bank. So who would be in charge of lending? Well, it's perfectly convenient because now we all have accounts with the Fed. Every single person and every single business. But let's remember that the Fed doesn't worry about a profit and loss. They have an infinite balance sheet because they simply print the bank reserves out of nowhere. So who cares if they don't get paid back on a loan they create? It doesn't matter. So the next time the average Joe goes to buy a house, the Fed, because they don't care about profit and loss, they don't have to look at a credit score. They don't have to look at anything that would tell them the ability of the borrower to actually pay them back. They could start looking at things such as a social score. So let's say the average Joe has a reasonable credit score, actually very good at 700, but their social score, because they haven't worn a mask lately, goes all the way down to 500. So the central planners that are all about social justice, they look at average Joe's credit score and say, okay, that's okay, but they look at his social score and say, no way, we're not giving you that loan. So Joe doesn't get his house. He was a bad person. He didn't obey the rules, therefore he doesn't deserve the loan. And you know as well as I do, all of these global elites want to move away from free market capitalism. They want to move away from the emphasis being on economic growth and prosperity, the creation of goods and services, and they want to take that spotlight and put the priority instead on social justice. And it's not me just saying it. To show you exactly what I'm talking about, let's go to the World Economic Forum's own website and everyone's favorite global elitist, Klaus Schwab. This headline pretty much says it all. We must move on from neoliberalism in the post-COVID era. And if you haven't watched any of my videos on this, the World Economic Forum sees the pandemic as an opportunity to create what they call a great reset of the entire global economy. So the next question becomes, what is neoliberalism? Well, for that, let's go right to Investopedia.
Neoliberalism is a little-used term to describe an economy where the government has few, if any, controls on economic factors. This concept comes from ideas first introduced by Adam Smith in his classic 1776 book entitled An Inquiry into the Nature and Causes of the Wealth of Nations, as well as laissez-faire economics. These economic policies are similar to those proposed by political groups referred to as libertarians. Neoliberalism advocates propose 1. The reduction or elimination of most business regulation. 2. The government should be required to balance its budget. 3. Taxes should be low and simple to calculate over a very broad base of taxpayers.
So neoliberalism is exactly what we need to continue to grow the economy and get out of this recession/depression that we're in. We don't need less neoliberalism. We need more neoliberalism. But let's go back to this social agenda that the global elite have. Further down the article, Klaus himself references one of my favorites, Milton Friedman. He says the Nobel laureate economist Milton Friedman believed the business of business is business. Of course, that makes a lot of sense. He didn't consider that a publicly traded company might be not just a commercial entity, but also a social organism. And you can see what's happening here is they don't like neoliberalism because neoliberalism gives the individual priority. They're the ones that determine how goods and services are distributed throughout the economy. It's a bottoms-up approach where Klaus and his cronies and the global elites, they all want a top-down approach. They want to make all the decisions. They want to determine what we should do with our lives. They want to determine what is right and wrong. They think that we are too stupid to make those decisions on our own. Therefore, we need to move away from this bottoms-up approach that gives the power to the individual and move more and more towards a centrally planned economy. In other words, communism. The problem the socialists, communists, Marxists, and central planners have is that communism doesn't work very well. Why doesn't it work well? There's several reasons, but the main reason is because there's no price signals, and prices in markets and in an economy are incredibly important. Let's go through a very basic example to understand how this works. So we've got lumber company XYZ, and with no prices, this lumber company isn't going to know where to distribute all of the lumber that they're creating, all of these 2x4s, 2x6s to create the homes. Where if you contrast that to this economy that's run by individuals, just like you and I, economy that the global elites would consider neoliberal, what happens there are there actual prices for things because there's demand, because people are free to choose what they want to buy. Therefore, if we have more housing that's being created over here, there'll be more demand for the 2x4s than over here, where those prices for the boards have gone down substantially. So the lumber company knows that they need to send more supply to wherever there's a higher price. Therefore, scarce resources get allocated in the most efficient manner possible. Where over here in this type of economy, they also have scarce resources, but they don't know how to allocate them. So it's the blind leading the blind. Therefore, you waste all of your resources and your economy collapses in on itself. It's exactly what happened in communist Russia. And I think the central planners are smart enough to understand this. So in their worldview, the only thing that's stopping them from achieving this utopian state is to solve the problem of price signals, or said another way, the information and the data required to allocate scarce resources efficiently. And if we read between the lines, I think we might see what they think a possible solution could be that might get them to their end game agenda, which is this utopian state of communism. To explore this further, let's go right back to the internet. I'm pulling this directly from the World Economic Forum's own website. The title of this article is AI, or Artificial Intelligence, is here. This is how it can benefit everyone. And this is from September 2020. AI can be used to enhance the accuracy and efficiency of decision making and to improve lives through new apps and services. It can be used to solve some of the thorny policy problems of climate change, infrastructure, and healthcare. It is no surprise that governments are therefore looking at ways to build AI expertise and understanding. And the World Economic Forum's suggestion to these countries is to set up something called the Center of Excellence. And my goodness, isn't this straight out of Orwell? So the Center of Excellence is a way to increase ethical AI. And who determines what is ethical? Of course, the central planners. Use in a country and build public support for it across the economy and the society. And here's where the pieces of the puzzle all come together. The center could draw staff from industry, government, academia, and civil society using a multidisciplinary and collaborative approach to provide advice on artificial intelligence and algorithm use for government operations. In other words, we can use artificial intelligence instead of the price signals generated by free market capitalism to help us achieve this tops-down, centrally planned socialist utopia. So how this could play out is the Fed or the central banks could eliminate all the other banks through negative interest rates, the boom-bust cycle, and not providing bailouts. So the central banks become the only banks. Because they have an infinite balance sheet, they don't care about a profit and loss, they can start issuing loans not based on someone's ability to pay it back, but through a social score. So these central planners can start to force upon us social obedience based on what they think is right or wrong, because they control the carrot that's in front of the horse. If you want to get a loan, you need to wear the mask. If you want to buy that house or that car, you need to ask every single person you meet what their preferred pronouns are. Or if you want to start a business, it better fit our agenda and be for the benefit of social good. The way we define social good, that is the key. So it starts with the social regulations, but then all of these transactions, the billions of transactions that occur in the economy, are all going straight to the Fed or the government because we all have bank accounts with the Fed. So they can analyze those transactions in real time, the ultimate big data. So artificial intelligence and the algorithm can tell the central planners where to allocate those scarce resources with alternative uses. They'll have all the data they need because all of our accounts are held at the Fed. You see how this works? It starts with the Banking for All Act. Then it moves toward the Fed eliminating their competition, basically, or all of the banking moving towards the Fed, then it transfers into a social priority, putting the carrot in front of the horse, that in order to get what you want, you have to do whatever they deem appropriate socially. It's all in the name of social justice. And while this is happening, they're accumulating all of the data they need to implement artificial intelligence, plug the data into the AI. The AI spits out where the scarce resources should be allocated. Boom, you've solved the problem of communism. You no longer need price signals, free market capitalism, private property rights, or personal freedom. They've now created what is in their minds a socialist utopia. So is their dystopian endgame agenda actually communism? And will they try to achieve those objectives through centralizing power through the Federal Reserve, big data, and artificial intelligence? I have no idea. I know the probability is above zero, but far less than 100%. And there are no certainties, there are only probabilities. This isn't a prediction. I'm not saying that this is going to happen. What I am trying to do is walk you through a thought experiment, understand the incentives, and understand the objectives of these global elite who think a centrally planned society is superior to one where you and I make our own decisions. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.